Kilo, yes.
Okay.
I'm from Congo.
I
Eh,
want,
do
sorry, brother. I'm recording now. Ne? I don't want conversations or whatever. Let's just get straight to the point. So yesterday we last did what? Please quickly remind me. Please quickly.
We did market structure,
Mhm.
uh, different types of trend, uptrend, downtrend, and ranging.
Okay.
What else?
I think that's all right.
Yes.
Okay. We've got what we call market patterns in the market. Yeah. We've got what we call market patterns. Market pattern is also one of the market behavior, how it normally uses to when it's moving. Just like when it creates higher highs and higher lows. So within those higher highs and higher lows, you need to find market pattern. So the first market pattern that I'm going to talk about is this one, right? Um, it's a W pattern. You see a W pattern.
yes.
This is called market structure. Guys, please forgive me. I want to connect to the main screen because wow, I'm not used to what I'm doing. I took the laptop down, but I can see that I am really struggling.
Coach, did you call it the W as the letter W pattern? Is that what you called it?
Yeah, that's an M pattern. We're gonna have a W on the bottom because
Oh, okay.
we find an M pattern at the top and then a W at at the a W at the bottom.
Oh, it's because of the way it looks. It looks like the letter M and the letter W.
Yes.
Okay.
Oh. I told you, I said the other day when we started, the way I'm gonna teach you, I'm starting you from the real information. I will end with what I was supposed to start with from the introduction. So yeah, please be aware of that. So we've got this M pattern, right? If you mute yourself, please. When you talk to other people behind you, mute yourself, ne? We can hear you this side. So this is market pattern. Are we all together?
Yes.
So
Yes.
what characterize this market pattern? It's the equal highs. So it looks like an M pattern completely, but it has what? It has equal highs from the top. So this is what characterize it to be an M pattern. Remember, I said this is market what?
Market structure.
Ah,
Market
Pattern.
pattern.
these are
Market
market
pattern.
these are market patterns. This is market pattern, right? So what characterize it? It's what?
The two highs.
The equal highs.
It has equal highs. It has equal highs. But I need you to understand something. Ne? It's not always the case where it has equal highs like that. Sometimes you're going to find something like this. But as long as when you look at it, it's not far from the M pattern. That's a market pattern. Do you understand me?
Yes.
It becomes
Yeah,
bonus when it has this,
Yes.
when it has equal highs. It gives it more higher probability. But if it doesn't have, if it's not equal, sometimes it can be the left shoulder to be below, and then it goes up and then comes down, right? So you see this, I don't know what you call this, but in trading, we call it a neckline, where it bounces from going to the upside direction. It's called a neckline. Are you guys writing this down?
Yes, sir.
So where it bounces at here, when it creates, we call it the first leg and then the second leg. So where it
So
bounces at,
sorry, coach. The first leg is weight going up, and the second leg is weight comes down.
okay, I'm getting it bounce here on the neckline and then
Yes.
goes up. This is the
Yes.
second, this is the second leg.
Oh, so it's on top there,
Yes,
above that. Okay.
and then it goes down. Forget about this.
Okay.
Forget about this. You see this level, this, forget about this.
Cool.
We don't make use of it. The most important thing that you need to focus on in order for you to confirm if this is a real M pattern or not, it's is the equal high, is this, is the equal high, and the neckline. Did you get my point? So the equal high and the neckline, it's what characterized this M pattern to be a valid one. Hey, Wutsilo, you're confused, né? So how we trade this, you see the neckline here,
Yeah.
the neckline, it's very much important,
Mhm.
this area.
Well, actually, it's the neck.
This is called a neckline. So
Oh,
how we trade it, you wait for the market to trade out of the neckline, and then they come back to retrace from the neckline, then they drop.
okay.
I don't know if I make sense.
Yeah, I got you.
Anyone who have a
So,
question?
coach, the entry point. Sorry, coach. So, will the entry point be when it retraces back before it goes
Yes,
back down?
yes.
Okay, cool.
So the neckline is very much important. So the first thing that you look at the equal highs. When it goes up, create these equal highs, come back, touch into the neckline, go create the second leg, then they drop. As they drop, when you wait for them to come back into the neckline. That's how my
Oh,
systematic BCB trading solution works. As they're coming back to the neckline,
okay.
right here, that's where you're going to find your entry. So at the later stage, I'll tell you what other things that you need to find here in order for you to find your entry. Here. There are certain factors of confluence that you need to find here. Write this down, guys. When I'm talking about factors of confluence, I'm talking about elements, stuff that you need to put together in order for you to find signal, in order for you to sell. When I'm saying factors of confluence, I'm talking about, for an example, what can I say? I want to give you an example with something. Other things that correspond with what we are looking for. So Ankeri, when we get here, we are looking for to sell.
Yes.
So let's say, for an example, we find a rejection. The market act as if like they're breaking above, and then they reject, they come down, then they drop to the downside, right? These are the factors of confluence. But I'm still going to teach you other factors of confluence, don't worry. I'm just summarizing for you, but what I need you to understand is this market pattern right now, how it works. So let's try to go and find it in the market and see if it will work on our favor or not.
I got a question here.
Yes.
Every time the market is gonna retrace on the neckline, or sometimes it do go above. Maybe let's say like yesterday, what you taught us about the retrace, the Fibonacci, that's 60 point is. Or every time it's retesting on the, it's going on the neckline every time.
I'll tell you what I'll answer your question. I already got you what you're saying. I already got where you're going. Just a second.
Wait,
So,
okay.
in other words, you are trying to say to me, when you trade this M pattern, you can also use the field retracement. And then your second question is it possible that the market can break above that neckline and still come back and continue to go down? That's what you're saying, right?
Yes.
Yes, it is possible. You will see as we are going to look for this market pattern on the market. You will see how the market react when it forms this. It is possible.
Where do we trade this M pattern? On the support or on the resistance, or anywhere we see this M pattern, we jump on top of it based on the direction of the market?
Remember, let me tell you, Ankeri, I've taught you about market structure. First, you need to identify the market structure.
Yeah, boy.
So if you're going to find a market pattern that is against the market structure, you have to first see the structure get broken on all time frames.
Yes.
To see that the market is changing the direction. Now,
Yes.
in order for you
Sir.
to trade this one, the M pattern to be more valuable, you need to find
Yes, sir.
a downtrend, because this is a sell pattern.
Of downtrend.
Yes.
Oh.
Okay, let's try to find it in the market. I'll show you how you apply it.
Time frame?
You can find it from any time frame.
Cool.
Okay, look at this. First leg, neckline, second leg this side, but we can still use this as the neckline, right? Right here, and leave the other one so that it can be clear, right? First leg, Second leg, neckline, broke out from there, went back to the neckline, then they dropped. Can you see?
Yes.
Yes. But coach, next to it, isn't that another one, but did not break down?
Listen, you know what I'm going to tell you about the market? The market will always try to confuse you to not see what you're supposed to see.
Okay.
You have to be open-minded when you trade. I've always been saying that. They will want to create something, but put something in the middle that will just confuse you. So you have to be open-minded all the time. Okay, look at this. First of all, look at this, ne? Look at this. You can see that we are riding on a downtrend. The market is creating lower lows. Can you see?
Yes.
All of
Yes.
this.
Yes.
All of this. You can
Yes.
see, right? Okay, thank you. And then look at this. They created that equal high. First leg, second leg, they dropped, came back to the neckline, then they went down. Can you see it?
Yes.
Yeah.
Yes.
Okay.
They failed to break that lower high.
So I have a question.
Yes.
In terms of the equal high, are we talking about the candle itself or also the wicks?
Every time when you trade, don't dwell too much on the weeks. The weeks, it serves as a history to tell you how the past trading session went about. Because I'm still going to teach you on how to read a candlestick. Hence, that's why I told you, I said, the way I'm teaching you, I took you straight to the highway. It's someone who's teaching you how to drive. He take you straight to the highway and say, drive. You don't know indicate, don't know anything. So there's still a lot of things I'm going to teach you, small details thing. I'm going to teach you how to read a candlestick.
Got it.
So you will be able to identify, okay, this candlestick, when it created like this, what was the kind of behavior that happened in the market? But for now, let's stick to this. So look at here, né? The market here was on an impulsive move, right? Can you say it?
Yes.
Yes.
So this, as I taught you about the market structure, this is the last higher low and then higher high. And then the market did what? It traded below that higher low. The structure was broken. Where is the structure broken? From the higher low, the last higher low. Because the market
Yes.
went and create a new lower low.
Follow. And I turn back to the high.
Right?
Which
This is a higher high. This. Then this is a higher low.
follow.
This. So as the market was coming all the way to the top, it was creating higher highs, higher lows, higher high, 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 higher lows, and then higher high. And then they broke out from that higher low. Then the structure was broken. I think yesterday I didn't teach you about how to identify a structure is broken. And that's what I said today we're going to start with. Am I wrong?
No, you didn't.
I didn't teach you about how to identify a structure is broken.
No, we
Yeah,
didn't do that.
you
We didn't learn
did
that.
start of the class, but not yesterday.
Come again?
I'm saying you did at the start of the class, but not yesterday. The first time.
Yeah, when we started from the beginning, I taught you about how to break, how the markets, how to identify where the structure is broken. Because remember, there's some other people who are new. So I have to go back to those things. So I'll do that, right? I'll go back to tomorrow. First thing that we're gonna do, I need to write it in my diary. Because I'll for someone remind me when this session ends to write it down on my diary. We need to start with how to identify where the structure is broken tomorrow, so that everyone we can be on the same page, right? So look at this. As they then now break below that higher low, then they go create a new lower low. This then now becomes a lower high,
High.
a lower high. This one, it becomes a lower high. Where is the lower high going to? It's going to the neckline. I told you don't be glued to the equal highs. Don't think this thing it will always do something like this. I told you don't be glued to this. Again, you remember, right?
Yes.
Yes.
Be open-minded when you trade.
So I think I'm confused. How is that a lower high? Are we not after that lower low? Are we not going on a what's this uptrend now?
No,
The down.
the structure is broken.
No. Yeah.
Ankiri, look at this. The structure is broken. I'll show you.
Yes, I can see it's broken there on the higher high.
Yes.
Yes. And then
No,
now
the structure, an uptrend is not broken. It doesn't get broken on the higher high. Because the next high from the higher high, it's a higher high.
Yes. It's
So
broken from
an uptrend structure doesn't get broken from the high. It gets broken from the higher low.
oh yes.
It gets broken from the higher low. So here we've got the last higher low, which is this one. So the market broke out from this higher low and went and created a new lower low, which is this one. After this, they then now went and retest the previous higher low, and then they started going down, right? And if you look at this, you've got a neckline right there. So if you look at it, you've got, I'll show you something also as well, right? So if you look at here, we've got an M pattern. I want someone who's going to tell me why it didn't hold. Why it didn't hold? Why was it not valid? Why was it not valid, guys? What do you think it was? It made it not to be valid.
We didn't create a lower low, or we didn't break a structure.
Break the structure, you are right. I need some additional information right there. Break the structure, you are right. Which structure we didn't break?
Isn't the neckline, sir?
No, the neckline was broken. But
Oh,
Okay.
so
yes,
I think it's because of that what do you call it? On that higher low. That is why it was on a bullish trend.
Thank you. That's what I wanted. So
Oh,
the market pattern is formed against the entirely trend. Remember what I said to Vutsilo when he asked me? I said to him, if you want this to be valid, trade within the trend. The first thing that you need to identify, what type of trend are we trading on? Are we trading on an uptrend, downtrend, sideways trend? If you're going to trade against the trend, it means that's where the structure is getting broken. If you look at here, what is happening? The structure was getting broken. That's why it was valid, this one. But this one, it's not valid because it's against the structure. Any W that has been formed and against the trend from here, it was never valid. It never hold. If you look at it. Never hold. So did you get it, guys?
Yes.
So this is an M pattern at the resistance.
At the bullish,
Right.
but resistant.
Yes. So now we are going to find another one. We were on an M pattern, right? Do you still want me to give you another example? So you've seen enough?
Yes, please.
You need another examples?
Yes,
Yes.
please.
Okay. I was looking at the time that I want us to do the double bottom as well, the inverse of that one. So the market will always dribble you. Like I said, you have to be open-minded all the time, optimistic, right? Can you see it?
Yes.
You have to be open-minded all the time. Don't be glued. I told you, don't be glued. If you are going to be glued, you're not going to be able to trade. Let's go find another one. Last one. What time frame am I on? I'm going to go to H4. Let's find something on H4. What is it that?
Coach, can I say something?
Yes.
Sorry.
Yes.
So when the M pattern forms,
Mm-hmm.
then it goes to retrace,
Mm-hmm.
and then it goes back up to the shoulder,
Mm-hmm.
to the neckline, sorry, to the neckline.
Mm-hmm.
So we have to really be careful of checking the trend before we trade, because just like the other one that you showed, it was an uptrend rather than a downtrend. So we need to wait a bit.
Yes.
Okay.
You have to wait for them to come back to the neckline, right? You obviously need other factors of confluence. Look at this one. It didn't hold. See? M pattern dropped. It was supposed to do what? Come back, retrace, then they drop. It didn't. Why? It's against the trend. It's against the trend. That's why it didn't hold.
sir,
Yes.
question.
Mm-hmm.
The M pattern, isn't it a reversal pattern? Like, let's say we are on an uptrend, then it forms an M pattern, then
Yes.
it start reversing.
Yes. You're right.
So I'm confused when you're saying it's going against the trend.
Okay. Look at this. Until this is forming against the trend. This is an uptrend.
Yes.
So when an M pattern is formed like that one, it's what does it symbolizes? This is an uptrend entirely. So when it's formed like this, It simply means that we have to change character. There's a change of character in the market that needs to take place. You understand?
Alright.
We have this one.
Yes.
Although the market didn't come back for the neckline, but I believe at some point they did, which is in line with the trend. In order for me to enter, I would have waited for them to come back, retrace, then they go up. It's in line with the trend. Although I'm not yet at the bottom at this one, at the inverse one. I'm not at the inverse one. I'm still dealing with these ones. I'm still dealing with the top one. I don't know why this name of it runs away from me.
But I just want to ask, but so I don't know, but that M pattern sometimes can cause change of the structure.
Yes,
Am I wrong? Am I right?
That's what I showed you from the beginning again.
Yeah. Okay. So it works.
Okay. Look
on
at
the
this.
support.
Look at this. Right? This is the first leg, second leg, broke out, retrace, then they drop. It was in line with the trend. Why what?
So if it's not in line with the trend, which means we must not trade it.
No, you don't trade something. Look at this one.
Oh, you don't trade it. You have to check the trend first before starting trade to
Look at
trade.
this one. Look at this one. It created an M pattern, come back to retrace, it failed to hold. It's against the trend.
The trend.
Okay, my question is a little bit funny, but it will help someone, man. There's two things. Okay, what I'm trying to say is this one, eh? We must trade against the trend, right?
No.
We must trade with the trend.
Yes.
Sorry, we must trade with the trend.
Yes.
Yes, I understand. So, but then you find that thing on the support and resistance, and then it change. It gives you the sign of change of the character.
Yes, the first thing that you need to find right there, it's the breaking of structure first. If it forms in line with the breaking of the structure, you can take it. That's another valid point. Actually, you're gonna wait for the structure to get broken first.
And then you find it on the middle of the trend.
It has to be in line. It has to be in line with the trend.
But if it doesn't in line with the trend, then
it's not valid.
Yeah.
Maybe when I'm explaining it, you don't see it. Maybe
don't try to force anything. It's as simple
as
I
understand.
It's not valid if it's not in line with the trend. It will give you problems. Forget about it.
Maybe I'll show you in the chat what I'm talking. But
no.
I understand.
Let me tell you, Mr. Refu. Don't try to complicate. Richilo, don't try to complicate anything. Take what I'm telling you. I told you when you come, erase everything that you know. Don't try to force anything. The minute you find it against the trend, it's not valid. Unless you find it at the break of structure at the top of the market, where the market is
now
structures. That's what I showed you. The first, look at this. This is the same thing that I showed you. It's just that maybe you are not taking things into consideration when I show you. The first example that I showed you, it was at the end of a trend. The market was breaking the structure.
Oh no, I understand what you're saying. Now I got it.
Look at this.
That's what I was.
Look at this, Mr. Wuchilo. Mr. Wuchilo. Look at this. Right? The market entirely, look at this. The market entirely here, it's an uptrend. Let's start from there.
Yes.
Or let me clean everything so that you can understand, right? Here is our main focus. The market here entirely, it's an uptrend here. This is an uptrend. This is
Yes.
what we are looking at.
Mm-hmm.
I'm not just saying it's an uptrend. According to market structure, here is it. Higher high, higher low, higher high. And then they try to create a lower low. They failed to hold it. Then they went again. They create a new higher high. And then higher low, higher high, higher low. And then higher high, higher low, 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 higher high. Then they broke. They went and created a new lower low. Right? And then let's mark the few important elements right there. Let's mark the few elements, which is the first higher high. That's what I'm interested into, which is this one, right?
Mm-hmm.
And higher, higher, low, which is this one,
Mm-hmm.
right? And then the last one is lower low, which the market came and create here, right? Are we still together?
Yeah.
Yes.
And then look
Yes.
at this. Look at this. We have the neckline right there. We have this small M pattern, right? They broke, went and create a new low, then they came back. As they were coming back, they now creating a lower high. They're creating a lower high right here.
Uh-huh. Now I got you, brother.
Now look at this. This M pattern happens at the top, at the bottom, and also where the market is breaking the structure. Because this is the last low, higher low. The market broke that higher low, went and create a new lower low. The structure was broken. As they going back to retrace from the neckline as the confluence, then they doing what? They doing what? They creating a new lower high, breaking from exactly from that break of structure. If you were to put a trend line here, you will notice something. Those who use trend line don't understand market structure. They will tell you that after the market breaks the trend line, some of you have been using trend line for the longest time, I know. What do you call this? Until the market has been creating a diagonal support here, right? They've been creating a diagonal support, touching into the same area. They broke out of that area that they've created as a diagonal support. This is what I was talking about yesterday. Then they did what? They came back to retrace. And then they dropped. Look at this. After that, the market never went and traded above that lower high. They dropped to the downside direction. Do you understand now?
No, I got it.
Yes.
We have come to the end of our meeting.
Ah.
We have come to the end of our session, to the end of our session. We're just left with
I know.
with a second.
Oh, okay.
Tomorrow we are starting with how to identify a break of structure in all types of trend.